Welcome, this is Earnings Edge on NDTV Profit. We are tracking earnings from, Patanjali Foods for the quarter gone by and what we can expect going forward. We are in conversation with Mr. Sanjeev Asthana, the CEO of Patanjali Foods. Mr. Asthana, good morning. Thank you so much for joining in. Let me start by asking you about what your assessment of the quarter has been and what you make of it.
So the quarter was positive in general. So we had a continued positive news on the edible oil front, which is a large part of our portfolio, that we started showing a positive return. Our foods portfolio has continued to grow. We had some welcome initiative, which is on the cards now, which we are evaluating an offer to acquire Patanjali Ayurved's non-food business with some of the most marquee brands in it. So in general, a lot of action, positive sort of news on most business fronts. And I think some of the challenging environment that we faced in the previous quarters, especially on the edible oil side, seems to be behind us. And we are looking at, positive times ahead. And hopefully, I think the momentum will continue.
Right. Mr. Asthana, going forward, can you give us an idea about the kind of growth that we can expect in FY25? What are the factors that could perhaps influence growth going in? We're talking to a lot of players in the industry, and they are suggesting that there are certain green shoots which are now visible when it comes to the rural segment, which was in fact on a back foot. But what is your reading in this matter?
So two parts, I think, that are defining this. So I would agree with the assessment that we're seeing green shoots of growth in the rural demand. I think certainly from last quarter, that is quite visible that the growth momentum is picking up at the back of, the positive prices on the commodity front, but the good agriculture growth, the rural credit, etc. So that's had a positive impact on the overall demand. On the side of the overall economy, I believe that with a lot of cash infusion, the overall the growth the economy is achieving. So on the FMCG business as well as on the commodity side and the overall business environment, I would be positively inclined that we'll see a good uptick in the growth, on the demand side. It should have a profitable opportunity for for the company because the commodity prices continue to be benign. And overall, my expectation is that, the corporate sector overall, and especially in the food and FMCG segment, we should have a good growth momentum going forward.
Right. So we do see substantial volatility when it comes to food oil pricing. At the moment, what is your assessment of the pricing environment, and how do you think that could develop based on the demand-supply situation that you are expecting going forward?
So that was a challenge. I think 5 quarters in sequence were a big challenge from the second quarter of last year till second quarter of this year. Post that, we've seen a stable price environment. The supply demand seems to be, reflecting a more stable price regime. One cannot, though, of course, one cannot guarantee on the commodity side because there's so much of international price volatility in the marketplace. But I would imagine that the edible oil sector overall, I think we have turned the corner in one sense of the, the extreme volatility and the challenges that it faced for established players who were operating from a long side position only, where we have to buy much ahead of the time when the demand market we go and sell. But broadly, I think it should be a much more stable environment that we are going to face on the edible oil side. And I think on the rest of the commodities like sugar and wheat flour and rice, etc., I think we should see a fairly stable price evolving in the year ahead. So net, the impact that it typically has on the FMCG companies, I think should be positive towards the profitability as well as in terms of the revenue growth overall, considering that the economy is growing and the demand is picking momentum. I think overall it should be good for the food and FMCG segment overall.
So just want your understanding on the progress on oil palm plantations. What's the update here? What can we offer and what can we expect going into the next few quarters?
So very positive. I think the effort which has gone in the last 2 years in terms of, bringing in the sprouts and putting in the nurseries. So as a quick update, we have bought more than 40 nurseries which are operational. We have more than 75,000 hectares of plantation which are there. The good feature of that is that the younger plants, which is 0 to 3 years, are almost 1/3 of what we have planted, which augurs very well for us in the coming years, because they are the ones when they start fruiting, we'll start getting the oil recovery. So overall, very positive. Next year, our target is that anywhere between 40 to 50,000 hectares we should plant. So I'm hoping to give you a good news that by end of next year, we should be closer to anywhere between 1.2 to 1.25 lakh hectares which has been planted. And all larger part of that will be towards the younger trees, which means that we'll have an upside when they start fruiting and sort of, giving us oil. The margins will be very positive, once we start, sort of these trees start to mature.
All right, so we leave it at that. Thank you so much for joining us and talking to us here on NDTV Profit.
Thank you.
There you have it. Well, that's the management of Patanjali Foods telling us about all that we can expect as we move into the next financial year. But we are out of time on this edition of the Small and Mid Cap Show. Lots more lined up on the other side. You're watching NDTV Profit.